Tariffs were initially presented as a strategic tool, a weapon designed to demonstrate economic strength, protect American industries, and rein in foreign competition. They were meant to serve as a shield for domestic markets and a sword to cut down foreign rivals. The theory was clear: put tariffs in place, make foreign products more expensive for American consumers, push production back to the US, and regain control over the economy. However, the outcome has been a nightmare far from the expected result. Instead of revitalizing the economy, securing jobs, or reinforcing America's global dominance, tariffs have ignited a financial catastrophe of such magnitude that the US stock market lost a staggering $4 trillion in value in just one day. This wasn't just a regular market dip. This was a direct reaction to a tariff war that has spiraled out of control. What started as an aggressive economic policy to elevate America's financial standing has turned into an unprecedented financial disaster, leaving businesses struggling, investors panicking, and the very people who were supposed to be protected, American workers and farmers, bearing the brunt of this reckless gamble. The US, rather than its adversaries China or Canada, has now become the primary victim of its own policies. The tariffs, which were supposed to fortify the nation, have become self-inflicted wounds, draining wealth faster than any foreign adversary ever could have dreamed of. The real question is, how did this come to pass, and where is the country headed next? Let's start with the first target of the tariff war, China. When President Trump decided to raise tariffs on Chinese goods from 10% to 20%, he envisioned putting extreme economic pressure on China. The logic seemed sound on the surface. Increase the cost of Chinese imports, force American companies to move production back to the US, and, by making it harder for Chinese products to reach American consumers, push China into economic submission. But this move drastically underestimated the resilience of China's economy and its ability to respond. Instead of folding, China retaliated with its own set of tariffs on US agricultural exports. This was a calculated response, one that took aim at American industries that were critically dependent on international trade, particularly the agricultural sector. American farmers, who heavily rely on exporting wheat, corn, and chicken, were blindsided by the sudden loss of their biggest buyer. The effects were swift and devastating. Orders dried up, shipments were delayed, and prices on domestic goods fell. The people Trump promised to protect, American farmers, were the first to feel the crushing impact of these policies. And as farmers watched their livelihoods evaporate, Wall Street plunged into chaos. American tech giants like Apple, Nvidia, and Tesla, which depend on smooth, uninterrupted global supply chains and trade relationships, suffered heavy losses. These companies had long benefited from cheap Chinese labor and stable trade flows, but when those channels were disrupted, their values took a severe hit. Tesla alone lost an eye-watering $125 billion in market value. The Nasdaq plummeted 4%, and with it, investor confidence started to erode. What began as a supposed pro-business approach by the Trump administration now seemed more like a financial disaster in the making. This wasn't the first time the US had engaged in a trade war with China. The aftermath of the 2018-2019 trade war was still fresh in the minds of investors. Back then, the US had imposed tariffs on Chinese goods, and in retaliation, China slapped tariffs on American products, leading to disruptions in global supply chains, rising prices for consumers, and a slowdown in global economic growth. The familiar signs of this pattern began to reappear as Trump's latest moves exacerbated these issues. The key difference this time, however, was the elevated stakes. The trade war was no longer a minor skirmish. It had escalated into a full-blown global confrontation with serious consequences. Business owners, uncertain of what the next move from the administration might be, began to scale back investments, freeze hiring, and hoard cash instead of expanding. Companies began to tighten their belts, concerned that the instability of the global trade environment would only get worse. And as business confidence in the US economy collapsed, so did the stock market. While China's response was anticipated, the situation with Canada was far more perplexing. Canada has been one of America's closest trade allies for decades. A stable and reliable partner, Canada was seen as an economic ally, an essential component of the North American Free Trade Agreement, NAFTA, and a major supplier of energy and raw materials to the US. Yet Trump's administration targeted Canada with the same aggression, imposing tariffs on Canadian steel and energy exports. A 25% tariff was slapped on Canadian steel, and a 10% tariff was placed on energy exports. The hope was that Canada would simply accept these new terms. But Canada responded decisively. In what could only be described as a fierce retaliation, Canada imposed a 25% tariff on US electricity exports. This single move sent shockwaves through the American energy sector. forcing U.S. manufacturers to pay significantly higher electricity prices, which increased production costs across industries. This was the opposite of the intended outcome. Rather than crippling Canada's economy, the tariffs ended up pushing American industries into an even more vulnerable position. The cost of production in the U.S. became more expensive, and corporate confidence continued to plummet. Delta Airlines, one of America's largest carriers, announced that its profit forecasts had been halved, citing economic uncertainty due to the tariffs. This announcement set off another wave of panic on Wall Street, triggering a 14% plunge in Delta's stock price. The effects rippled across the broader market, and soon, the S&P 500, a key index of America's largest publicly traded companies, began to spiral downward. The market, which had been riding high just a few weeks earlier, was now in free fall. The true depth of the damage was revealed when the U.S. stock market lost a colossal $4 trillion in just one day. This wasn't just a minor fluctuation. It was one of the worst financial crashes in modern history. The effects weren't confined to a single sector. While tech stocks and agriculture were hit hardest, the collapse spread to nearly every major industry, from retail to banking to cryptocurrency. Even Bitcoin, typically seen as a safe haven during times of market instability, took a 5% hit, as investors fled risky assets in favor of more stable investments. As investors scrambled for safety, the prices of U.S. Treasury bonds soared, indicating a mass exodus from stocks into safer government securities. The yield on the 10-year Treasury bond, a crucial gauge of economic confidence, plummeted to 4.22%. This marked a critical turning point. Investors were no longer willing to bet on growth. They were prioritizing stability and safety, signaling fears of a looming recession. Despite the carnage unfolding in global markets, the Trump administration remained relatively indifferent to the economic devastation. Some insiders within the administration even suggested that they were willing to endure a market downturn if it helped them achieve their broader trade goals. This approach, however, shows a complete disregard for the long-term consequences of such an economic policy. The ramifications of these policies are not just theoretical, they are tangible. As businesses lose confidence, investors flee, and job growth stalls, the damage caused by the tariffs will not be temporary. It will be deep, long-lasting, and potentially irreversible. The U.S. economy is in the midst of a self-inflicted crisis, and the longer these tariffs remain in place, the more damage will be done. What's truly alarming is that this entire crisis has been self-inflicted. While China and Canada have certainly retaliated to U.S. tariffs, they are not the primary cause of the financial meltdown. The real cause lies in the reckless policies instituted by the Trump administration. The tariffs, which were supposed to give America a competitive edge in global trade, have instead destabilized the economy. What was intended to bolster the country's standing has instead triggered a chain reaction of economic uncertainty, inflation, and capital flight, putting America on a dangerous path toward financial collapse. The worst part? This is just the beginning. Trump's entire strategy was based on the assumption that China and Canada would buckle under the pressure of tariffs. But these countries have demonstrated resilience and resourcefulness, while the U.S., dependent on short-term political cycles and financial markets, has been left to suffer the consequences. China, having absorbed the initial blows, is now using this as an opportunity to accelerate its transformation into a self-sufficient technological powerhouse. Meanwhile, the U.S. economy is on the verge of crumbling, with no clear path forward. One of the most damning aspects of the tariff war is that it was implemented without any coherent long-term strategy. There were no contingency plans for how the U.S. would manage the retaliation from other nations. No diplomatic groundwork was laid to de-escalate tensions, and no consideration was given to the long-term economic fallout. What we witnessed was an ill-conceived political move disguised as economic policy, and now the consequences are undeniable. The market crash that resulted in a $4 trillion loss is not just a blip on the financial radar. It is a brutal verdict on Trump's failed experiment in economic policy. This kind of economic destruction affects far more than just Wall Street. The ripple effects are felt across the entire economy. Jobs are lost, purchasing power diminishes, and retirement savings shrink. As businesses pull back and investors flee, the U.S. economy contracts further, pushing the nation closer to a recession. With no clear exit strategy and no willingness to reverse course, the question remains: how much more damage will America inflict on itself before someone steps in to stop the bleeding? The tariffs, which were supposed to fortify America's economy, have instead become the very force that is tearing it apart. This isn't just about trade wars with China or Canada. This is about America turning against itself. Washington has transformed its economy into a battleground, and its people have become the collateral damage. The real question is, how much more destruction can America endure before it reaches a breaking point? At this critical juncture, the future of the U.S. economy is uncertain. Will the nation come to its senses before it's too late? Or will America continue down this self-destructive path, deepening the wounds caused by misguided economic policies? Only time will tell, but if things don't change soon, the damage could be irreversible. So, what do you think? Will the U.S. economy recover from this unprecedented crisis, or is it too far gone? Let us know your thoughts in the comments section below.